All right, Sunday, November 27, 2016. I'm going to go through commodities here. I missed these bullish indexes in the previous video here, so I'll go through these real quick. Basically, what you have here is the bullish percent index, and what that is when it's calculated using point and figure charts. Okay, so when point and figure chart is in a bullish pattern, it'll change this. Basically, it's between 0 and 100 for the number of stocks in the sector that make up the index here. So here it'd be the New York Stock Exchange. So it'd be the total of the New York Stock Exchange. What percentage of stocks in the New York Stock Exchange are in a bullish looking phase? Now that doesn't mean, say for example, something like IBM that hit a peak a few years back, that overall that the trend may be down or lower, that in the short run the pattern is bullish. Okay, so here basically 64% of the stocks in the New York Stock Exchange are in a bullish phase. Okay, and you can see the turn here after the election, when there was about half of the issues that were in a bullish phase compared to a bearish phase. Okay, so even though they do say that they're in a bullish phase, it doesn't mean that the overall trend isn't lower. It goes back, here you see 2015, down here is at 30% level. This is about 50% level. And you can see how it correlates to the underlying theme that I go along also with the pink dots. So the pink dots, we're getting issues that have turned and moving higher, the swing from the election low. And so this is also turning the individual issues, about 2/3 of them in the bullish phase. But you can see here, at highs of say 70% when they're all leaning towards a bullish phase. There is a little bit of a lag on here. You can also see that there are also signs of divergence beginning in 2016, where we had the low coming off of the first interest rate hike. Okay, so here we are basically in a sense we have the New York Stock Exchange is working on the high here, and not as much participation that are in a bull phase. So what I'm looking for here also is signs of divergence. You assume one with new high, you're going to have more issues that turn into bullish phase. Okay, so that's the New York Stock Exchange here. And then you go to the Dow Jones, and here you have where the Dow Jones is making a new high, and 2/3 of them are in a bullish phase. So one would assume that as this continues higher, that more issues would turn into a bullish phase. Also remember that the Dow Jones is only 30 issues, and that it's also price weighted compared to market cap. So the index, it's going to be a little more sensitive to turns, but it's also going to get jammed. You can see up here there's 90+%. Compared to in the past. Here you see down here at it's coming off basically below 30% that were bullish. Thinner indexes, you're going to get more where the price is jammed versus a broader base index where you're going to see a little more. It'll be smooth, not as sawtooth type here. And here's the S&P 500. So here you have the S&P 500 breaking out. Basically, overall, on the breakout, the line in the sand for me for reversal would probably be about 2180. Set an alert for that for a reversal on here. Right now, the angle of ascent is quite high. That's usually a momentum indicator here. That there's a lot of chasing going on after this. You are coming off of where half of them were, half the stocks in the 500 were in a bullish phase, and the other half they would not be. So here you can see previous highs when things begin to wane in the index. So what I'm looking for here is to see if we can, if we can turn more issues, a broader based rally here with the new highs, or if this is just going to be a narrow based rally where once again the money just flows into the few issues that are moving and not the overall market in general. I'd like to see a broad based rally. That would be healthier than just a narrow based rally like we had going into 2000. Where it was just everyone was just chasing after the NASDAQ stocks, and the New York Stock Exchange had actually been trending lower for a while. And there's S&P 100. This would be one to watch here. The first gut reaction is it's not getting as much oomph on here for follow through, and these are going to be your conglomerates, which are going to have difficulty here with the dollar going forth. I did notice that in symbol TMV that there was a large candle, I think Wednesday. So a lot of people got in. It opened higher and closed lower with a lot of volume. So in the short term, we may be seeing a bounce here in the debt market. Like I said once before, or previous video, that I'd be looking for some sort of a fade coming into the FOMC in a couple of weeks here. One of those where participants begin to use logic and it doesn't work. Raising of the rates, you figure the dollar would go higher because that's how they go hand in hand. And all of a sudden you begin to trade lower off of that, and say the dollar and higher in bond prices would bring interest rates back down. We'll see more here with how sales went and our Cyber Monday, things of that nature. But remember that, we have, there's the demographics have changed in society, or in the United States here with population and that. I actually met a family here that they are American, but they weren't celebrating Thanksgiving because it wasn't in their heritage. So that was kind of interesting when you stop on by and drop off the fixins and the old what is this. So a lot of things have changed over time, and there'll be new trends and new traditions and that do develop on here. But in regards to the S&P 100, I'd actually keep an eye on this one here, because you do have the S&P 500, but this is the 100 of the largest inside of it. So you're beginning to look to see if things begin to narrow on here, because basically I'm going to go with the flow on this one here. On the swing here because of the angle of ascent, but also I'm looking for signs that there's a possible reversal in place here because of, like I said, the dollar going forth in interest rates. There are times when we do have a high in January, and then the rest of the year we trade lower. And I'll go through that in another video on presidential elections. But usually when there's a change, you've seen it in the past, 2000, 2008, it's best to get the recession out of the way ahead of time, so you're not having to fight re-election with during a recession, because it's as it was stated by Bill Clinton, I guess it was Carville, it's the economy, stupid. And that's Americans vote with their wallet. If it's empty, it's tough to motivate people to vote for an incumbent president when things aren't working out. But as you can see in the past here with the 100, you do get the higher end moves here, and basically I look at that as cautious. It doesn't mean that there's a turn imminent. It just means that the index or the underlying individual issues are in a phase and they're susceptible to a reversal. And here's your NASDAQ. Now here's your NASDAQ. Here we're at 64% of the issues in the NASDAQ are in a bullish phase, and we're also trading higher through here. like I mentioned before, the Santa Claus rallies, typically the low-priced issues and those that have been battered all year that are picked up. And a lot of what I believe is going on here is short covering, because you have a lot of stocks, and I have pointed it out, there's a lot of stocks this year that have dropped sharp. I mean, they've been in a super bear market for the whole year, and now they're getting a bounce. That for those that do the fundamentals, it's going to be difficult with the stock price. But for here, like I said, I'm going to go along with it with the up move on here, but also be vigilant of a reversal in here going forward. I'm going to assume most of us, and judging by the put-call ratio and everything, you start sliding into new highs. The first thing is you get the doubters to come out on the like the Russell. You know, how can that be? Well, it's there because they're usually the low-priced issues, and that's what I was looking for on some sort of hard slide in equities. That's what going forward, that's what we go after. For those of you familiar with the .com, that's basically where we're at again, where you have these over-the-counter issues that lead the way. They're mostly service orientated, so they don't have to take on much inventory. Everything's in the cloud now. Computers are coming without disk drives, and so there's not. When your inventory is in the cloud, you don't run into warehousing and other traditional issues that you had in the past with warehousing and things of that nature. Here's the NASDAQ 100, also to go along with the OEX, the 100. S&P 100, the same type of deal here too, that they got the bounce off basically 50%. So it'd be like a tipping point, right? If you did more than half the stocks, you're going to feel it here, like here where it cracked. Same type of deal again, where we're getting a bounce. The 100 is trying to work its way out of to try and turn into new highs, but it is floundering. I do expect it though to push through here and follow with the rest of them, with the rest of the indexes that are into new highs here. But it's one of those signs where it's like, okay, everything's running, but why isn't the NASDAQ 100 running? Here you have the overall NASDAQ composite where it's running. But the larger stocks that were the leaders aren't. So it's that whole rotation. Everything that was in the 100 here is they're beginning to, they're not interested. And that's the thing too, where are you going to put your money? You're going to go put your money into Apple that hasn't been producing for a couple of years, or are you going to go into something smaller that has been beaten up for those couple of years and go into it? So you rotate out of one into another, but I'm watching this just for signs of what was leadership is now cracking, and usually when you have a leadership, it's a good sign that they continue on. But with the NASDAQ 100 not, to me, it's kind of worrisome. On the way up to 2000, the focus was narrow and narrower and narrower. Things got insane, and then of course the NASDAQ lost a bunch, like 2/3. So it's just, to me, it's just, I look at it as warning signs if the NASDAQ 100 can't get through on here. But I'm going to assume that it's going to be pulled up with them. And it should be earlier in the week here, because you're going to have those issues also respond to domestic spending for the holiday season. But for right now, though, it is worrisome. I believe I put on a weekly. I looked at it as also there's a possibility of a head and shoulders on here, and I also mentioned an ABC correction. So it's one of those where everything begins to run, like the Russell and that, and all of a sudden the NASDAQ doesn't, and then people check their positions here. it's every individual issue it's each on their own. I try not to put too much parlay on this has to happen and this has to happen and this to have this happen. This is too much. Up, down, sideways is basically it. But for me here, when you had your leadership stall out, it becomes worrisome that now the only thing left in the marketplace is just these battered, beaten up stocks that are being chased after by short covering. And that's not healthy, because you're looking for in a healthy, sustainable bull market here going forth. And this one just lists the Toronto Stock Exchange here. Basically the same thing. It's poking up. It's not at its previous high. It's about, what are we at? It's about, 70% of the previous bounce here too. But you can see it came off of from 80% down to 2/3 that were bullish and not much bounce here. And we are seeing things like copper in that, and the materials, they're moving, but gold in that, not at this time. So they're moving up. Basically, it's mostly in the banking and financials at that point. So, going forward here, my concern is just watching the NASDAQ 100 to see if there's any continuation in here, because you'd like to see the leaders continue on. But if you're rotating out of one sector into another, to me, that becomes worrisome on there. Because basically, you have your NASDAQ 100 not following suit, but you have the indexes. So they're just basically, you kind of look at it as they can afford to buy a $10 stock, but they can't afford to buy a $100 stock, that kind of thing. So the strength of the participants begins to be worrisome too. We saw that with what happened with dries. Just an incredible amount of reverse splits on this thing, and gets one run, and then they indiscriminately start buying everything in the sector, hoping that it would translate, and it's not. And we get the reversal, and then you get an opportunity of buying quality on where they get out of it. And typical of what happens, it falls out of vogue, and then they move into, they go begin to chase after something else. So they may have the right idea at one time, and then they changed. They jumped in, it didn't work, they get out and they go find something else. So if you watch something, which of course the shippers have been beat up for a long time, I think it's a decent sector. 95% of all goods goes by ship. So if we're going to see a strong dollar and lots of imports and things of that nature going forth, it would be on the shippers. There's besides the dry index, there's a wet index, and that one correlates along with oil. And we'll begin to take a look at those now.